Broadcast is now starting. All attendees are in listen-only mode.
Good morning. I know I'm a little bit early here, but I want to set up the screen, make sure my volume is working. Thank you, Lance. Very awesome. All right, I appreciate you being here. Not sure how big a crowd we're going to have today. A lot of people signed up. European Central Bank meeting day today generated some excitement. Talk a little bit about that, but we'll get into it. We're going to start right on time at 10 o'clock. Maybe not. Maybe we'll start a little early. I don't know. I'll be back, though. We'll talk. Officially, we're going to start at 10. But unofficially, I'm going to pop back in about 10 minutes. So thanks for your patience, everybody. And let me get that screen up here so everybody knows what we're doing. And I will be back. And I have the screen all set up, and we are ready to go. Frederick, hello. Frederick says hello to everybody, not just to me. Just super awesome. Thanks, Frederick. Where are you from? Type it in there. Everybody else is way ahead of you on that. All right, let's officially get started here. I got 10 o'clock, more or less. Good morning. Good morning, Bob. My name is Jim Cagnina with Infinity Futures. We're going to talk about market profile and market profile trade ideas. What I'm going to do today is I'm going to walk you through what it is, how we, what it is, how we find trade ideas off it, and then we'll set up a chart from scratch to show you how to do it. Abe asked me to speak in French. I wish I had that skill. I really do. So that's what we're going to do. It's 10 o'clock here. I do want to remind everybody trading futures, options on futures involves substantial risk of loss, not suitable for all investors and traders. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. If you're not sure where you fit on the risk capital curve of things, give me a call or call your customer service rep here at Infinity. Everybody here is relatively, or I would say very highly experienced in this business of online futures trading. So feel free to use that free resource as you go forward. And then lastly, remember, past performance not indicative of future results. When I say, hey, this is a great trade, keep that in mind. When people post, it might be a good trade today. It might not be a good setup tomorrow. The paradigm of the market does change. Things change, and be careful when people are posting crazy performance results without being in a regulated entity. Okay, so let's just dive into it. I don't have a PowerPoint today, so we're gonna not have any. We're gonna get rid of the boring stuff. This is let me get my mouse going here. All right, this is a 30-minute candle. Everyone's familiar with a 30-minute candle. This is the E-mini S&P. Remember, we're trading in June now. We're rolling over today, and let me show you what that means just from a quote board point of view. I have the the current contract, which is expiring, right? The March contract is ESH9, and if you go all the way over to the right-hand side, you'll see the volume is a little less than 1 million so far today. Underneath it is a new contract, the ES M9, the June contract, and over there we have about 30,000 contracts traded. So it's about 3 to 1 the roll so far today. Right, and as we go forward throughout the rest of the day and tomorrow, this balance is going to shift. We're going to see more. We're going to see more volume in the June and less in the March until it's zero. But the good news is about the E-mini S&P. It's thick enough. In other words, the bids and offers are pretty dense. So it's thick enough to trade what is now the front month, the June month, without worrying too much about the bid-ask spread. So that's the good news with the E-mini S&P. I'm going to move this out of the way. So you're going to see June up here. 30-minute chart, a candlestick, right? So red candle's a down candle, a green candle's an up candle. And what I like to, this is 30-minute, and that's the basis of a market profile chart. It's 30-minute increments. And the easiest way for me to show you what this is I'm going to hold these two side by side. I'm going to have, this is not the one I want to hold side by side. This is the one I want to hold side by side. Now, if you see these letters, right? A, B, C, D, E, F, G. Each set of letters represents a 30-minute time frame. And right now, as an example, we are in the K time frame, right? And that is tracking prices between 10 o'clock Chicago time and 10:30 Chicago time. And whenever there's a price that's traded at a price, whenever a new price occurs, it prints the letter K. And it only prints it once during this 30-minute period, even though the market will trade at, I don't know, 54, 55 even, a bunch of times. This is not volume. This just tracks if, in fact, the market actually traded at a price during that 30-minute increment. If I go back to J's, that was from 9:30 to 10 o'clock. It tracked which prices traded during that half hour, and it put a letter there. If I go to I, I'm going back a half hour, 9 to 9:30, et cetera, et cetera, et cetera. Now, I started this chart at 1700, which is 5 p.m. last night. Remember, this is a 23-hour market, right? So we started at 5 p.m. last night, and we're going to go all the way to 1600 or 4 o'clock this afternoon, right? So that's how I'm setting this up as. And it's a 30 minutes intraday, and again, we're going to go ahead and start one of these from scratch at the end. Okay, so Chris says, so each tick has a K. Yeah, so each tick has a K. Now, I have this set up in a couple of tick increments to make it so you don't have quite so many letters in a row, and I'll show you what I mean by that. But basically, you're right. Each tick has, if it trades at that tick, it will have a letter associated with it during that 30-minute increment. And if you look at these side by side, this looks just like the candle, right? We have a high, we have a low, we have a high, we have a low, so it matches the candle. So this is basically this is a candle in letter format, kind of, right? Again, no volume here, and there's no volume on the candle either. It's just high, low, open, close. So this is the easiest way to kind of start thinking of, oops, what did I do? Start thinking about market profile. Now, this view that I'm showing you isn't a typical view. I have this spread out, right? I have this spread out so that I could show you the 30-minute increments, right? This is last night. Not last night, I should say yesterday afternoon. If you're in Chicago, from 5 to 5:30 is right here, right? This is the start. And this is this blue, light blue, teal, I guess, I don't know, teal column here, or line here, is called the initial balance. And I'll show you how we set that, but basically we set it at the beginning of the session, and it basically marks the first two periods of price action to give you what's called the initial balance. And that's maybe more important either pre-market at 7:30 Chicago time, or when the market opens, the equity markets open at 8:30 Chicago time. And this approach works not only with stock index futures markets, but with any kind of market. So you have to think about when the market really opens up in the U.S., when the market really opens up in the U.K. or in Europe, when the market really opens up overnight. So those are important times. All right. So, but a traditional, if we were to squeeze all these letters together, if we were to squeeze them together, then we would end up with, let me pull it up here in a second. We would end up with something that looks like, oh, I have these things bifurcated also. Let's just undo that. I'm going to undo all splits from this chart. If we squeeze them all together, we're going to have a chart that looks like this. We're going to have a chart that looks like this. This is the standard, typical market profile view, right? It's not spread out accordion style, but this is all squished together, right? So whenever a brand new price trades, the letter goes as far left as it can go, right? As far left as it can go. And you generate these patterns, right? These are called the market profile pattern. Now, the typical, today's a unique pattern, and so I want to show maybe a more typical pattern. So here's a more typical pattern. Let me this is on the 4th. Let me straighten this out. This is a bell-shaped curve, and you guys have heard me talk about this before, a Gaussian distribution or a normal distribution, and it's very symmetrical, right? This is very symmetrical. And what we have here is 3 different areas, right? We have these letters in gray, which is called the value area. Okay, and this represents one standard deviation of this bell-shaped curve. It's actually 70% instead of 68%, but close enough. We're going to call it one standard deviation of this bell-shaped curve. The blue letters on top are called prices above value, and then the blue letters below are called prices below value. Okay, value area, prices above, prices below. This red line, these red letters, they're called, these red letters, these represent the price that's traded the most times throughout the day in a 30-minute basis, right? This has the most letters in it, right? It's called the point of control, And the point of control on a normal Gaussian distribution day acts kind of like a magnet, right? So when prices are trading up higher, we end up coming back down. When prices are trading lower, we end up coming back up, right? Now this isn't magic. This isn't something that that's 100% for sure, right? Because things happen in the middle of the trading day. Supply and demand changes, news events occur, economic releases happen, relationships with other markets happen. So you can't, if we start out the day with a normal distribution, and you trade based on it being a normal distribution, it could change. It could surprise you. But if you know there's no more scheduled news releases, and the likelihood of a black swan or a curveball coming at you is relatively small in your opinion, then maybe you could trade this based on the idea that at the end of the day, we're going to have a normal distribution. So I want to look for the point of control and trade around that. Now, as the day goes on, this point of control might change a little bit, right? It might move up or down a little bit because we're developing letters as we go forward. Okay, we're developing letters as we go forward. Any questions yet? No. Okay. Oops. Wait a second. What did happen on this thing? All right. All right. Let's go. Let's fast forward to. Let's forward to this view right here. This is today. Now, today we had some interesting things happen, right? We had the jobless claims release in the U.S., which didn't really do anything. We had the ECB do their policy announcement. And that did something, right? That kind of generated some price action, I don't know, around 6:45 this morning. Hang on a second. I got a good question here from Keshav. Why is there no L or M? Because K, we're in the K period right now. Right? We're in the K period right now. We start with big capital letters, and we get all the way to the end. We get all the way to the end. We do 24, since it's a 24-hour day. We do 24 of the 26 letters. And then we go to the little a's, right? We don't have a Y or a Z. We go to X because that represents the 24 increments in a 12-hour day, a 12-hour period. And then we go to the small a's and go B, C, D, E. We're at the K's right now, right? So in 15 minutes or 17 minutes, then we're going to start with what's next? The L's. And then in another half hour, we're gonna start with the M's and N's and O's and P's all the way until the end of the day, right? And all the way until we get to little y. So that's why right now there's no L's and M's. We're not far enough into the day yet to have L and M's. Does that make sense? And this is a difficult concept to grasp, but once you do it, you're gonna get it. Ekram, that's a great question, and I'm going to talk about that. So today, this is what is called. So we had the ECB announcement this morning, and there's probably some other stuff going on, which caused the equity markets to kind of break down. And hang on a second, let me go back. I just want to make sure everyone understands this. So Chris, yeah. So remember this: each half hour, if a price trades, you get a letter. So each letter is 30-minute increment. Each letter is a 30-minute increment. It's time, but we're squishing it together so it doesn't look like that. Okay. So this is a classic, what's called a double distribution, right? We have a relatively normal early morning distribution. We have a news event and a market open. Prices drop. And now, in fact, let me get my ellipse out. We are creating a second distribution, which, the names say double distribution, right? Now we're trading down here, and we're looking for points of control down here. And that's very important because the expectation in my mind now that we're going to end up that this point of control is going to act like a magnet and bring prices back up. That idea is out the window in a double distribution. What these single H's here represent market weakness. Supply and demand was small. People there wasn't a lot of trades there. There wasn't a lot of, it traded for that half-hour increment there, but it went straight down, right? So these are weaker prices than we're having now. Supply and demand here was fleeting. Supply and demand here is reestablishing itself from where it was up here earlier this morning. Okay, it's called a double distribution, and from a trading point of view, we're going to look for opportunities within this distribution instead of up in this distribution. Okay, and it is, what is it, Thursday today? It's lunchtime in New York, maybe. I don't know. No, maybe not. It's early morning. We're in a low volume period right now, so we're not going to see that much stuff. Let's go ahead and add a. Now, someone asked a question about times, and you could split these distributions, right? You could split these distributions, and one way to do it. So I'm just going to go ahead and pick a letter, and I'm going to right click and I'm going to say split the profile here. Okay. And so what I've done is I've cut it in half basically. I have a night session and a day session that starts at 5:30. The night session starts, yesterday afternoon, and goes nonstop until 5:30. Then I cut it in half, right? Now 5:30 was just a random, where did I cut this thing off at B? Probably I would do a couple letters later. So let's go to G. I'm going to re-merge these. Undo all splits. And we'll go to G. We'll see what G brings us. We'll split it at G. We'll split profile here at G. This is 8 o'clock. Now, so we want to go one more. We want to go H. So let's undo splits. We'll go H. And this is how you kind of figure out if you don't have all the letters memorized. Okay, so now I've basically split the profile between last night and when the U.S. market opened. Okay, and that's 8:30 Chicago time. So now I have two sets of information. One, what happened last night, which is pretty, very pretty market profile position there. And then what happened this morning, and you can see that we had, this is when everything fell apart, right? So everything's fallen apart here, and we're beginning a new distribution right here. So points that are important to me just from a day point of view, and I'm going to draw some lines, is, let me make this, I'm going to make this a little bit bigger, and we'll go 2, we'll make it blue. Okay, this is the transition between this breakdown, prices below value from the morning session, and it's a nice separation. We're going to copy, we're going to copy and move to the low of last night. There's another area that's important to me. Now I already have the point of controls, this dotted line here, this red dotted line, to show me the point of controls, because those are important to me also. Okay, so that's important. That's important. The last one I'm going to draw, I'm going to go ahead and do copy and move. Our prices transition from value area and prices below. Okay, so now I have some levels to consider for order entry. And, one of the things I'm going to do in my head is, am I bullish or bearish? And for those of you who've been to my presentations before, you know that I start from a monthly, I go to a weekly, I go to a daily, and I try to figure out if I'm bullish, bearish, or this is a sideways market. I try to characterize the bias in the marketplace right now. And I believe we're in a sideways market right now. Even though every time I say that, we rally to try to get to 2,800 again. Let me open this up a little bit more. Okay. So, let me get a trading ladder up to show you a trade idea here, which would be typical trade idea for this. Here's a trading ladder. And if I'm bullish, right, if I think the market's going to go up, one of the things I want to do is try to find an entry closer to this 2748, right, closer to the transition area. And with the idea being, this is going to go ahead and this will form a more normal distribution over time. And that's if I'm long, right? If I want to be bullish. So let's just pick, I don't know, we'll pick 40. We'll pick the line exactly here. So we're going to do a quick click here. Oops, let's cancel replace that. And then the question is, where do you put your stop, right? Where would you put your stop in this? You have a limit order to buy here. You want to get long down at the bottom of the value area, and then where are you going to put your stop? Well, you would put your stop at prices below, right? You'd push your, underneath. It would be new lows, right? So new lows, let's just say, I don't know, 46, right? 46. So here's a stop at 46. Now that's kind of a typical. That's kind of a typical idea if you're long. Now, me and you know that as soon as we do this trade, we're going to get filled at 48.75, and this isn't for sure. This is just what happens a lot of times. And then the market's going to continue to go down, and you're going to be stopped out, and then it's going to turn around again. So the more conservative approach is to let prices dip down so that you can move your stop and be careful you're just not whipsawed out. That's a more conservative approach. Now, alternatively, the opposite is an equally valid idea. Let's say that we want to be short. We think the market's going to go down. We'd rather be short than long. So, we would try to sell the 60s, right? We try to sell the 60s. I know they're far away right now, but they're really not. This market moves nicely. And then where would we put our stop? Well, our stop really is going to be near last night's lows, right, of 27.66. So, we probably wouldn't go that far because these are prices. This is an important point. These prices, the market's kind of shrugged off here, right? These prices, the market's kind of shrugged off here. Not a lot of supply and demand. We just had a brief time at these prices. So it's market weakness right here. So unless we're going to have a big rally upward, and we're going to have a big reversal on the day, and I'm wrong about being bearish, then my stop's going to be probably in the middle there. Closer to the transition line. So let's just pick 62 or 62.5. That sounds fair. 62.5. So this would be my stop right here. So that would be the anatomy of this trade, right? And we would hope that, in fact, if we were short at 60, then we'd pop back down in the middle of this distribution. Is this making sense right now? These are classic kind of market profile setups. Al asks, why not let price move down and then buy when it returns to the value area? That's a good question, and that could be a strategy. But my concern is, let's say we get to the value area here, and actually we're going to have a new value area in a second. In 6 minutes, we're going to have a new value area, right? Because we're going to trade an L. That's going to be put somewhere. But the idea of central tendency is that the value area is in the middle, and that prices will deviate above and below that middle, right? And you don't know if it's going to deviate above or below. You don't know if it's going to deviate above or below. So if I want to wait for it to get here and sell, then I better hope the deviation goes down, not up, because now I'm going to be worried about my stop. And it's a more aggressive. Your approach is more aggressive, which could be fine. I just I think it's better to take a more conservative approach. I think it's better to trade less. Even though I make money when you trade more, I think it's better to trade less and be patient. Patience is the main thing you need to have. Abe asks, must the S&P be taken into account in the quotation at night? You could completely ignore this if you wanted to. You could just say, I'm just trading off the New York hours. and do that. But I think this provides you with some valuable information. I think it provides you with pre-market information where, don't forget, this is a 23-hour market, so when Europe opens up, there's a lot of activity, there's a lot of volume, things are happening. And the opinions that are being expressed by buyers and sellers in Europe at night, or in their morning or their day session, are valid, and they're based on technical analysis, and they're based on the information as we have it today. I would even suggest, and I'm going to squish this up a little bit, even though we're trending downward, that you would look at a previous day profile for levels also. So, yesterday's lows was pretty close to last night's value area. Last night's highs were pretty close to transition between value and prices below value. So you start developing levels, which could become important to where you're going to place your stop and where you're going to enter. Okay, so looking back at the questions here. Are you combining overnight with the day trade when you start? All right, I think we got this one. Yeah, I think we talked about separating these two. Now, some people will separate, instead of separating at 8:30, they'll separate at 7:30 to get a peak of economic release action. Okay, and we could change that. Instead of separating where we separated it at G or at H, we would separate it 2 letters earlier, right? And, it was at D, A, B, C, D, F, F. We just separated at F. But I like to do it at 8:30. I like to do it at 8:30 because that's when we have a lot of new volume, a lot of institutional volume, a lot of people trading the spreads between the cash, the SPY, and the regular and the futures markets. So that's where I would split it. But a lot of people do split it at 7:30 in the morning also. And I'll show you. Okay, so we're going to actually set one of these up from scratch, I think, as opposed to just look at how I have it set up. I have my letter block increments at 4 ticks. And what does that mean? 4 ticks, even the S&P, 4 ticks equals 1 point, right? So from 2764 to 2763, if a trade happens in that 4 tick increment, you're going to get a letter. I don't have it broken down by letters. I mean by ticks. I have it broken down by 4 ticks. So, and let's change it to see what it looks like. So I'm going to go ahead and change the letter block increment to 1. And what sometimes happens is the profile, it's too messy, right? It gets too, you know what I mean? You can't fit it on the screen anymore. You can't fit it on the screen anymore. So this is with every single tick shown, you get a new letter. For E-mini S&P, I think it is just fine to do it in an even point or 4. And so that you have more real estate, your real estate's not compromised as much, and you get an idea. You can use your 15-minute chart to go ahead and figure out exactly the price you want to get into, if it's that, if it's that important. All right, so I can find my mouse here. We are going to add volume profile to this chart in a second. All right, I think I'm all caught up on questions. All right, so let's go ahead and let's just add it. You start with any kind of candle you want, right? So just make sure your times are right. 17 to 1600. This is an intraday 30-minute chart. So now I'm going to go to analysis and studies for you Sierra people. And we're going to go to a thing called TPO, time price opportunity. That's what another name for this is. TPO profile chart. I'm going to highlight it on the left-hand side, and I'm going to hit the add button. And let's just go ahead and apply Okay, and see what this is kind of the default look, right? The default look. And you'll notice something odd. There's no letters here, right? So what the default look does is it changes the letters to a TPO brick, right? So if the letters aren't important to you, if it's not important where the D period traded, you just wanted to see the profile distribution, then you could set these TPO bricks up instead of letters. And I'll show you how to toggle back and forth. The little red arrow is where the price is trading right now. Now I'm going to customize mine a little bit differently. So let's go ahead and do that. We'll go to Analysis and Studies. We'll double click on it. And the default here, we have letter price block increment at 2. We talked about this. I'm going to change it to 4. You know, for a market like crude oil that's traded in tenths, you might want to make this, I don't know, 5 ticks maybe, or maybe 2 ticks. You know, you experiment with the presentation on your screen. Dami is here. Hello. Profile time period length 1, we're going to leave that alone. Profile time period length unit days, leave that alone. Number of TPO profile periods, multiple periods based on, leave it alone. TPO block letter time price is 30 minutes. Leave that alone. All of this stuff is left alone. Align profile volumes to TPO, nope. Display total TPO count, nope. Highlight open in profile, yes. Okay, we highlighted the open, and that one is that little tick mark. Highlight TPO value areas, yes. I'll show you that tick mark in a second. Highlight point of control, yes. Value area highlight based on volume. No, we're not basing it on volume. We're basing it on bricks. We're basing it on letters because we're going to add the volume profile next to it in a second. Point of control highlight based on volume. No, point of control highlights based on the bricks or the letters. TPO value area, it's that 70% I talked about, or 1 standard deviation, right? And then extend value area. You could actually extend the value area over. Let me just show you what that looks like. So we'll change this to yes. Here, let's just look at it right now. And what that does is it puts these lines, these blue lines there, right? It's just extending it so you can see it better, these blue lines, this blue line here. And we're going to get rid of these other 2 highlighted lines because they're not important. Again, this is my opinion, they're not important, but so we extended the value area. We could also do the same with the point of control if you want. Let's go ahead and say yes to that. We'll do end of window for now. We'll do end of period for that. Extend singles, no. This is all good. TPO block letter colors, we're good there. Shade TPO blocks, we're good there. Sub period, this is where you would change blocks to letters. Blocks to letters. Okay, I just changed blocks to letters. Let's scroll down here. Font size, all this stuff we're going to keep the same. These extension lines confuse me, so I'm turning them off. IBR extension, I'm turning them off. Okay, we got percent, minimum, new period, all this stuff is good. Initial balance range. Now this is that teal bar I told you about. I have it set to 2 periods, right? The first 30-minute session and the second 30-minute session, or the first 60 minutes. You could change this if you like, but this is the default that I like, especially in conjunction with what happens with the New York Open. Okay, I'm gonna hit apply, and then we'll go back and change some other stuff in a second. But let's see what we end up with here. Okay, so we're ending up with the value area is highlighted, point of control is highlighted. There is no prices above value here. This is a double distribution, so we don't have any prices above value. And the only way we could really get there today, and I don't think we can get there today, if this thing fills up so much that this part of the distribution moves south here in a significant way, is the only way we're going to get prices above value, unless we have a ginormous rally at some point and we start trading way up high. When I say ginormous, we're talking 23 handles, which again, I don't think we're going to get there. Abe, to answer your question, I could send, if you had an account with us, I'd be able to send you this chart book and you'd be able to open it up. You know, I'd in effect build it for you, if you want. Yes, I always, who I said, I always use 30 minutes. That's the standard default. Now, and I don't know why it's a standard default, but this is, it makes a little bit of sense because there's a lot of trading happens on 30-minute bars. You know, we started doing this on the floor of the board of trade. We'd sit on the pit on the corner. This is the early 80s. And we do this with a pencil and a piece of paper, you know, and a piece of grid paper, because we didn't have, it wasn't computerized back then. And so this is how we started tracking this stuff. When we were literally, you know, clerks on the floor of the Board of Trade in the early 80s. And it's kind of evolved to computerize itself, and it's awesome now that it's computerized. It's a lot less work, and it's easy for everybody to do. So yeah, I can get this to you. I can shoot that out to you. Gail, the answer is yes, and I'm going to show you that in a second too. All right, so here's where we open this little. See how the A is colored? This A is colored 2776. Remember, open was last night. The initial balance here, A's and B's, first two sessions, that's teal. Gray prices value area. Pink is point of control. And the lime green is prices below value. Now, let me go ahead and just make some real color cosmetic changes here. And the way you do that is you go to subgraphs. And then you just kind of figure out what you want to change. Point of control, let's make it red. Point of control extension, we'll also make that red. And we'll do, I don't know, dotted lines maybe. Make it a little more subtle. The TPO's prices above and below value, instead of this horrendous color, we're going to change it to blue. Open marker will keep the same. Midpoint will keep the same. Initial balance will keep the same. Let's hit apply and OK. Apply and OK. Okay, so now it's a little bit easier for us to see. So the next logical step is let's add a volume profile to this chart. Let's add a volume profile, which is similar to market profile, and it's going to show a real similar distribution, but it's based on volume instead of 30-minute increments. We're going to go to analysis, and we're going to go to studies, and we're going to look for a study called volume by price. Volume by price. Here it is. Volume by price, lower left, and we're going to add that. Okay, and I'm just going to apply and show you the default look, and then we could play around with it. So here's the default look for volume by price, and you could see, actually today's a great day to see how volume by price could differ from a market profile. A lot of times they're almost identical, but in this particular case, we had lesser volume in the night session, even though we have the point of control way up here. And we had more volume after the market opened, and we have a smaller profile down here. Volume came in the morning. Volume came in the morning. Now I'm going to customize this. First of all, the colors are bad. There's no information. I got these. These are this is volume by the bid. Is the red. Volume on the offer is the green. If that's important to you, keep it. But if it's not important to you, you don't have to. Let's take a look at some of these settings. Draw mode, volume profile, that's good. Ticks per bar, remember we set it 4. Based on the TPO is yes. You know, we leave this at no. We don't change this. We don't change this. Let's keep going down here. We're going to start at the same time. Right aligned volume bars. I think I want to change this to a yes. I want to right align the volume bars, and it'll invert it. Display volume in bars. We could display the total volume point of control only, the bid versus ask volume. Let's just go ahead and display the total volume. Volume calculation method. I do not want to split the bid ask. It does not help me, so I'm going to change that to no. Bid volume and ask volume. Colorization, I changed it to none. Drawing outline is good. Use transparent drawing style. I'm going to say yes. Transparency level, I'm going to shoot this up to 65%. Highlight the value area? Sure. No, we're not going to do that yet. I'll do that in a second. Value area percentage, all the rest of this stuff I believe is good. Let's hit apply and OK and see what we got. Apply and OK. All right, now we have the profiles facing each other with the actual volume number within the actual histogram, and we're starting to see a picture. And remember when I said these prices were, let me just do this real fast. These prices were just market weakness, price weakness. They were, right? We had less than 2,000 except for this one price increment here, which is the midpoint. H is the midpoint where you have that pink line. It's just, there's just as many prices above as there is below. And this is what makes this a perfect double distribution, really. You have the midpoint right in the middle of the weakness. So you could really reiterate that with the volume next to it. Let me erase this thing here. Erase. I'm not very good with this mouse here, so we're just going to erase. All right. Is everybody with me so far? And Gail, did that answer your question? I'm tracking volume on a 4-tick level basis. If you want to check it on a tick level basis, you're going to set these letters to 1 and you're going to set the profile to 1. Right now it's set to 4 and the profile is set to 4. Steve, thank you. All right, so where are we on our trade idea here, just out of curiosity? And remember what I said about trade ideas, patience is key. And I don't know, obviously we're not looking at the news right now, so we don't know if there's any the price action tells us there's no. So it looks like we did get short 2. Okay, so we get the short 2, it's 60 even. We have our stop up here at 62.50. Is that still a valid place to put the stop? Probably not. But that's okay. We could leave it there for now. I mean, the midpoint is a little bit higher, so you could take that in consideration. I didn't think of that. We didn't have that colored up the first time, but the midpoint's probably a good place to be. But, we're going to be conservative. We're not going to change our mind. That's the worst thing you could do, really, is change your mind. And what I would do, we will probably get stopped out here, but what I would do here is I would try, this is a 2-lot trade, right? This is a 2-lot trade. So I would probably try to take one contract off, right? So I would do something like this. And first of all, let's cancel these other orders that I have down here. Right-click cancel, right-click cancel, go back up. So what I would do is I would probably try to take one tick off somewhere, right? And try to lock in some sort of profit on one lot. Move my other stop to break even, and hopefully, and we talked about this last week, I think. If you look at the webinar last week, it kind of demonstrates this whole idea. You lock in one of your units. It could be a 2-lot, it could be a 4-lot, it could be a 6-lot, it could be a 3-lot, whatever you want, right? Or if you're just doing 1-lot trading, that's fine also. If this was if you didn't want to do this, then the risk-reward ratio is off here, and this wouldn't be a good trade setup. But let's see where we would get the 1 tick. I have it just randomly set at 60. I'd probably lower that to this particular ledge right here, and say, all right, somewhere up in here, 59 maybe would be a better place. And I lost my dome. 59 would be a better place. And that's not good enough, so we'd keep it there. But here's another place based on what I'm seeing right here. If you wanted to be more aggressive, you would say, hey, this is the new point of control down here somewhere, right? This is the new point of control down here somewhere. Let's go to the ellipse tool. And this often helps, actually, using the ellipse tool on a day like today, and say, all right, here's where I expect the new market profile, to develop over the course of the day. And if I'm more aggressive, I'm going to be, hey, we're going to get down here on my one unit, down to 56-ish or so, would be an estimate for that. And what did I do with my dome here? The GoToMeeting software takes some space up, so I apologize for that. So we would be down at 56. Or 56.50, something like that. That would be a reasonable look right now. This would be a reasonable look right now. How I got, all right, so Ron says, I missed how you got the line at 27.66. So let's do the, okay, so this line here, Ron, is automatically generated because I remember when I did my market profile setup, I said extend value area, right? When I checked that yes to extend the value area, what it did was it drew these lines to frame the high and the low of the value area, right? And usually this is in the middle of a distribution, but because today we don't have a middle, this is what it looked like. Now you could do the same thing, Ron, you could do the same thing for the volume profile side of things also if you want. You could highlight the value area. You could shade them different colors. You do the exact same stuff I did with the market profile on the volume profile side as well. All right, so far, you know, we're in patience mode, we're in wait mode. We didn't move our stop, which is usually a bad idea. We stuck to our guns, and we're hanging out. This is the most important part of day trading future. Really, trading anything is patience. You know, you go out to buy your first house, and you want to hit the offer. I got to have this house. Honey, we have to have this house. I don't want to bid $10,000 underneath it. We won't get it. You know, so these emotions are universal. These aren't just, you know, day trading futures emotions. These emotions apply to anything. So patience is the hardest thing. And we're in sim mode, right? So who cares? But in real life, right now, don't bite your fingernails. Chill out. You have a plan in place. It's based on some science. You know, and if it works, great. If it doesn't work, it's okay. We're going to play this out here. We're going to see what happens and see if we can get any price movement. It's a weird time of the day. It's 10:48, and we're not getting a lot of price action, obviously, just because of the time of the day and the lack of anything too crazy happening today. And sometimes these are the days where market profile works the best, right? When there's not a lot of economic releases on the horizon. You know, we're not waiting for a Fed announcement. We're not waiting for a U.S. North Korea summit meeting to end. We're not waiting for we already had the European Central Bank do their thing this morning, so that news was out of the way. So, you know, from here on out, maybe we will have some normal markets. Now, the other thing to keep in mind, too, at the end of the day, let me show you this also while we're here. This happens every once in a while. Let me just go to a regular chart. This is a regular bar chart here. And let's take a look at the day. So we have a down day, right? We have a down day. This is probably a bad chart to show. Here we go. This is better. We have a down day so far. And then let's just draw some lines here. This is just kind of a line I'm going to draw there. You know, we have a down day, and we have a retracement. Now, with retracements, as we know, where's my retracement tool? Price retracement. On a retracement day, sometimes they're really retracements, right? Sometimes we're really retracements. Right now, we retrace to the 38.2% level, which everyone says, oh, look at that, we did it. We hit the first Fibonacci level. And then and the conventional wisdom is, all right, we hit it, and we retraced, and we're done retracing, and we're going to break that back down. It's a down day. Today's overall down day. That's kind of option A. Option B is we're done for the day. Price is happy. We have price happiness. The markets are happy. We have equilibrium. Supply and demand are the same. Option C is, oh no, this is just a temporary retracement. You know, this market needs to go down. This whole all this stuff with China going on, with the Fed going on, with the GDP projections, less spectacular than they were 6 months ago. Market's right. Chris said it. Market's at the top, so it's time to sell right here. That's option C, right? So I just told you, you can go up and go down and go sideways. But at the end of the day, one of the things to be careful of at the end of the day, when there's an hour left in trading, is there is a real phenomenon where sellers, people who were sellers up here, want to get out of their positions at the end of the day, and so they're going to be buying stuff back. And this doesn't happen every day, and this isn't a universal truth, but sometimes it happens. So you got to be careful in the last hour that this buyback isn't going to really price us into the close. It's harder to trade the close than the open, I think. So keep that in mind. Keep that in mind. All right. Any other comments, questions, hopes, dreams? Where are we at on a trader? Here's the ladder. I got to tell you, this trading ladder, and I'm going to blow my own horn for a second. This thing is outstanding. If you haven't tried it yet, go to our homepage, infinityfutures.com, and simply try it. Your only cost is your email address, and you could opt out of the emails if they're too annoying. So you'll get an auto email the first time with the username, password, and the download link immediately. There's a gazillion YouTube videos. I'll show you where to find those in a second. And try it. I mean, it's single click, single click order entry, single click cancel, all these OCOs. It's terrific, especially in this kind of market. 10 ticks up, 10 ticks down. You see the volume. All right. What am I missing here? Oh. One really important thing. If you guys could do me a huge favor, I'm going to put in the text box here a survey. A link to a survey. There's only 3 questions on this survey. And if you don't want to take it, you don't have to take it. But I would consider it an awesome favor if you did. I'm going to go ahead and put this link. And this is something I just made up. So there's no footer, there's no header. It looks a little weird, like it's illegitimate, but it's legitimate. I'm going to send it to all. And we're trying to get a grip on who's who. We really want to customize these presentations and provide content and value based on who everybody is and what you want. So this is kind of the first survey we're doing. If you get time, I mean, it's not that big a deal. It's like I said, it's 3 questions. Take you a second. Hopefully you can cut and paste from my answer box right there. I just sent it to everybody. 10:54. We're going to stick around for 6 more minutes. We're going to stick around for 6 more minutes to see if the 11 o'clock candle, 11 o'clock hour does anything. Remember, there is a lot of algos and there is a lot of automated trading out there. And a lot of these systems, I don't know how many, are bar-based, right? They're based on bar formations. And one of the most popular bars is the 30-minute bar. So, well, this would also be a 15-minute bar, a 10-minute bar, a 5-minute bar, right? So at 11 o'clock, things could happen. Your prices could move a little bit based on that type of that type of order management technique that's happened, automatically with folks. And even manual traders will react to a bar, right? They'll look at a bar and they'll decide, or a candle bar, and decide, they have their indicators and all that other stuff going on, but they'll decide if, is it time to make a move or not. Oh, Ron, I'm sorry. If on that survey, good point. I just made that like last night and I was tired. But if you're with us, then just put, I'll know it. I think just put none of the above or whatever. If you're with us, I'll know that. Good catch though, Ron. If you have a live account with us, don't just say none of the above or none or whatever, and I'll figure that out. So, thanks, Lance. All right, so we have 4 more minutes here. We're looking okay. I mean, don't be worried. Don't be worried. Johnson asks, can we get a recording of the webinar? Yeah, I'll show you where you get that in a second here. As soon as I don't want to put a browser up until in 4 minutes. I'll put a browser up. I'll show you. It's basically our YouTube channel. And there's a couple other places of content, educational information. I'll show you where you can get them at. And actually, while we're waiting, I'll preload them in a browser here. Let me just move this over the other way. I'm gonna show you a couple different places to go as we wait and wait. The good news is the people who are going to watch the video could fast forward to the punchline here. If we might not even see a punchline, we'll find out. Let's see. Yeah, we're good there. And then the last one is called Charting Club. Uh-oh. Hang on. That's my YouTube video automatically playing. Hang on. All right, I stopped it. Sorry about that. All right, 3 more minutes. Abe, thank you for being here. I really appreciate it. I know you guys got better stuff to do. I will do 2 things at the end of this. I'm going to email out a recording of the webinar to everybody, and then if anybody wants these chart books, if you're using Sierra and you want to just upload these chart books, send me an email. I'm going to give you my email address. I'll give you my email address here in a second. First, I'm going to repost this. A couple people are asking for the survey again. So I'm going to repost it. Give me a second here. Send to all. Okay, it's in the answer box, so you should be able to see. Hopefully you can cut and paste it there. My email address, thank you. That's very nice of you to say, guys. I really appreciate that. Is j.cagnina at infinityfutures.com. I'll send this all. If you want the chart book, email me. I'll zip it off to you. Be happy to do that. Give me a couple more hours to get this thing rendered and posted up on our YouTube channel. And, well, while we're waiting, I'm going to show you this anyway. I don't want to keep you here all day. Practice account, simple. You're just going to click on this green button here, fill out this form, get started. You will get an auto email immediately with username, password, download link. infinityfutures.com, youtube.com/infinityfutures. You're going to go to our YouTube channel, and we have a whole bunch of how-to videos. Don't get crazy. The search function actually works pretty good, but it will be posted here, and you'll be able to see it if you click on videos. It'll be the first one on videos. Lastly, chartingclub.com. We're adding 2-3 videos a week, all about Sierra. If you're interested in Sierra, how to use it, what are the features. It's a membership site. It's free, and you're welcome to spend some time in there also. I don't know why it's rotating like that. Anyway, those are the resources. Always call your customer service rep. They'll be here to help. Arturo asked a great question. How long is the SIM account valid before one must open a live account? Arturo, we're able to do it for 30 days. We can't distribute real-time data past that. So, that's kind of your time frame. Between me and you, I know this is recorded. I shouldn't say this, but if you need a couple days extension, just let me know. All right, but when you get it going, you spend time on it, bang on it every day. Oh, other thing, Arturo, which is really important, is trade realistically, right? So if you're going to have a $10,000 account, you're not going to be trading 20 lots if you're brand new to futures. You know what I mean? So, trade with 1, 2, 3, 4 contracts at a time, and be patient with that. Don't see how much money I could make. I'm going to see how big a green number I can get. I'm going to do a 20 lot on the Euro FX. You got it. All right. Thank you. I know. But it'll help. All right. So we got one unit, right? And you're saying, all right, we're still short one, Jim. What do we do now? Well, first thing we're going to do is we're going to cancel the stop up here at 62.50. And we're going to do a one lot stop at break even plus 1, right? I want to get my commission back if we go all the way back up here. So that's why I did it there. Now we're going to pick a second place, right? We're going to pick a second place on where to get the second unit. And this is really important because pigs get fat, hogs get slaughtered. You don't want to be too greedy here. You have an opportunity. A new point of control is forming, volume point of control anyway, is forming right here at 75. So if you want to overshoot that to 54, that might be a good idea. Anywhere from 55 to 54 might be a good idea. But or if you're happy with what you got, take what you got. If you're happy with what you got, take with what you got. But so that's how I would frame it, like that, if it was me personally. And then the longer it stays in the middle, you could you could trail your stop down and eventually get stopped out. But that'd be a 2-lot multi-unit trade idea where you want to try to get you want to lock one in and then have a free second unit, basically. Okay. Ron said 49. I like it, Ron. All right, so I think we're pretty much done here. I thank you guys for spending this time with me. It's been awesome. I love doing these things. Next week, Patrick's going to do one. We'll have Patrick Zielbauer do one. I might do a how to use the platform, 101 tutorial on Tuesday. How to place these orders, how to use this dome efficiently. But the meat and potatoes are next Thursday with Patrick Zielbauer. It should be on our website shortly. And that's it. That's all I have. Remember, trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Be careful. Thank you, everybody, for the kind words. Be safe out there today. Take care.